With over 20 years in providing quality service, Apex Radiology is Jamaica's premier diagnostic facility. Our services include CT scans, nuclear medicine, ultrasounds, x-rays, and more. We have 3 easily accessible locations in the Kingston area and 1 in Ocho-Rios. With our mission to provide exceptional and affordable healthcare, Apex Radiology is a clear choice for your diagnostic needs.
At Apex Radiology, we understand the importance of your health. With our state-of-the-art mammogram services, we extend our promise in offering the highest quality care. Don't wait. Schedule your mammogram today with a 10% discount for the month of October.
Welcome to the Q2 2025 earnings call for Image Plus Consultants Limited, also known as Apex Radiology, with ticker IPCL on the Jamaica Stock Exchange. I'm your moderator for today, Renee McDonald, CEO and Investor Relations Lead of Learn Grow Invest Limited. Today, Mrs. Keisha Anderson, CEO of Image Plus, is here to discuss their latest results with you, their shareholders of the company. There will be a Q&A segment after the presentation, so we invite you to post your questions in the chat as we go along so that they can be addressed during the question and answer segment. With that, please join me in welcoming to the platform Mrs. Keisha Anderson.
Hi, good morning, Renee. Good morning to all our stakeholders on the platform. I'm happy to be here.
Thank you for joining us as always, Keisha. We look forward to the usual in-depth and transparent presentation and a robust question and answer section. We do see some questions in the chat already, and we have some that came in from the Jamaica Observer as well. So we will be going through those. But before that, I will hand over to you to open with a word of prayer, and then you can go right into your presentation.
Okay, let us pray. Father God, I give thanks for the gift of life. I thank you, dear Lord, for every single person who contributes to Image Plus Consultancy and also to the delivery of healthcare services in Jamaica. Dear Lord, your word in James speaks to wisdom that is impartial and peaceable. And I just ask, dear Lord, now that you continue to provide us with wisdom and that you go before me even as I speak, so that the clarity that our shareholders and stakeholders need, they will receive. Now bless our staff today, dear Lord, bless our patients and our referring physicians, and let all be done in good order and according to your will. In your precious name I pray. Amen.
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 Okay. Over to you, Keisha.
Thank you. All right, good morning to everyone. I know that seeing our results, people will be looking forward to this earnings call, and I am going to try my best not to spend too much time regurgitating the results, because I'm sure that our stakeholders would have read the director's statement and the actual financial statements. And I will allow as much time as possible for question and answers so that anything that our community wants to know, they will have access to. Okay, so our Q2 results, I guess, say that they're not as we had envisioned. And when things don't go according to plan, I know it's a good opportunity always to stop and to question yourself, and as a board responsible to our shareholders, our board would have done that. And we had to ask the question, was it that our strategy is wrong, or is there something else in terms of our execution? And I think clearly we're very comfortable that our strategy and our decision to expand our modalities are the right thing to do. One, they're right for the very reason that Jamaica needs an expansion of these modalities in diagnostic imaging services in Jamaica. You find that as it relates to MRI offerings, that we don't have a large number of institutions, even the public institutions that offer MRI services. And when it comes to 2 particular scans that we offer, the MRI of the prostate and MRI of the breast, we find that there are maybe 3 or 4 providers at most in the entire Jamaica that offer. So we are very confident that it was the right thing for us to do to expand into these modalities. So knowing that it is the right thing to do, the question we must ask ourselves is what are we not doing right about how we're executing it? And that is what the management team and the board has spent time looking at to figure out what we can do to improve the results. So I want to share that with you. I want to share what also went wrong as it relates to our machine downtime, and then I want to expand a little bit more on how we move forward from there. So we are building a revenue model, and we're building a business not for immediate. So, sometimes you make long-term decisions that take some time to get to the result that you want, but it's the right decision because it's for a sustainable result. If we look at our financial highlights, however, and we look at our case count, which the case count is what drives everything. The case count determines what revenue we make, and the case count actually also impacts how we spend some things like our direct costs. So let's look at our case count. And if we look at our case count, we will note it's there. The lighter blue is for our 2023 6 months result, and the darker blue is for 2024 6-month result. And if we look, we'll see that we had some decrease over prior year. The largest bars would be for X-rays, which we were down about 19%, and our CT, which we were down 24%. Now, the new modalities, I'll get to that in a minute, but you can imagine that even when we were entering the new modalities, MRI and mammography, we knew that it would take some time to build up. So what we really see manifesting in the first 6 months is that our existing modalities would not have also performed as we intended. So let us look at CT, because even though X-ray would be down 19%, the actual revenue impact of X-ray being down 19% is not significant. And I think if we think about, I know I get the question every earnings call about the impact of build out in the public sector. I think we all know that one thing our public sector facilities have are X-ray machines. And so we may be seeing some downturn as a result of that, or we may just be seeing as a result of accidents on the road, probably not being as much broken bones, etc. So that, because it doesn't have such a significant revenue impact, I won't spend too much time on. As it relates to our CT case count being down, though, that would have had a significant revenue impact to the tune of about 70 million in the first 6 months of the year, because we would have been down 1,438 scans over prior year. And as you can imagine, we didn't intend to be less than prior year. So in addition to that 1,438, you would have added what we intended to grow by. So that explains a significant amount of our reduction in revenue. And when I get to the revenue figure, I again will reiterate why. As it relates to the new modalities, MRI and mammo, you will note that we did 2,199 scans in the 6-month period, and that would have generated revenue of about 53 million, which is about 8% of our total scan count. And you will note, therefore, that growth is there. 53 million is not a small feat in a 6-month period, but I would say that we had intended for that number to be at least 1.5 times that. So the takeaway I would say is that, and again reiterating for emphasis, is that the result we're seeing is not so much as a matter of our new modalities not performing as it is that our existing modalities, CT in particular, did not deliver the result. And you may say why. And we spoke in the director's statement to what happened. Our CT machines, I think it would have been, well, I know it's the first time since I've been here in 4 years, the CT machines were all down at one time. It is something that I know that even on our board, our directors are wrapping our minds around how to actually overcome that, as some of these parts are not as straightforward as stocking parts. I think the last time I gave an analogy as how you'd stock maybe tires or something for a car. So the CT tube, which is what failed us in 2 of the instances, are really not a failure because something was wrong, but because of extensive use. Now, the question may be asked, so why not order and have on stock? There are a couple of reasons why. When the machine goes down, it has to be diagnosed specifically, and that diagnosis is sent to the manufacturer to determine exactly what part and have them confirm if it is a tube, etc. And 2, when that actual part gets here, it's in a warranty period. that expires at some point. So therefore, we would not have been able to just buy tubes and put them down. What we're going to explore, though, realizing the significant risk to the business, is that we're going to explore with our local suppliers and the overseas manufacturer if there is a way at a particular level of usage that we can then order a part and have on hand and still maintain the warranty. Because I know if we don't maintain that warranty, our shareholders are going to then ask why we're spending twice for the same part, you know. So it is not a very straightforward thing. And really, if you can say a failure is due to use, then a failure in this instance was due to use, and we just had it all at the same time. And then to compound the situation, when we ordered, there were shipping delays, and when we actually got, after a few days of use, the part for one of the tube for one of the machines was deemed dead on arrivals or defective, so it had to then be replaced, and the cycle started again in terms of shipping delay and receiving. So that would have been what explained that. And as I said, management we're wrapping our heads around it, and our board members on your behalf are actually holding us to finding a solution to that issue. So let's get to the numbers. If we look at our revenue now, so if you go to the next slide for me, Renee. Thank you so much. If you look at our revenue for the second quarter, it would have been at 245 million, or down 3.4%. This compares to 253 million in the last quarter, and it would bring the year-to-date figure to just over 538 million. Our gross profit would have been down 1.5%, or 161.9 million in the prior year period compared to this figure, bringing our year-to-date gross profit to 349.5 million. And therefore, our loss before tax for this quarter would be 16.25 million, and it compares to a profit of 38.67 million in the prior period. Year to date, then, it would actually impact our earnings, bringing our year-to-date profit after tax down to 15.4 million. If we look at our scan count year-to-date, it stands at 26,955, which is down 6%, and our earnings per share at the end of 6 months is now down to 1 cent. Looking at a little bit more at the numbers, a final cut of it, and looking at the margins, we will note that our gross profit margin has pretty much been consistent, and in fact, it actually improved over the prior period in this financial year. That is because our direct costs, we were able to manage that even within the reduction in revenues. And it would kind of make sense and go hand in hand in the sense that the direct costs, some of the imaging supplies you'd be using less of with us doing less scans, and we'll be paying less professional fees with doing less scans. The story is very different, though, when it goes to our operating profit margin and our net profit margin, which we see being deflated and kind of working hand in hand, and since 2023 going in the wrong direction over the last 2 quarters. And this would be because of the increase in our some of our line item costs. And if you go to the next slide, Renee, it will help me to explain that we have had a significant increase in our depreciation and amortization because we have expended in new machines, new assets, and therefore the depreciation on that would be heavy. So if we look at 2024 compared to 2023, we said there was an increase of 48%, and it's a similar situation so far for 2025. The other thing that would have impacted our performance as it relates to our operating profit margin would be our increase in staff costs. And we said that there was an increase of over 14%, which was higher than inflation. I would have shared in the last quarter that we would have paid our staff inflationary rates to keep them, their earning potential, especially in this economy, keep them on par. And then we would have also indicated in our director's statement that in addition to the increase for inflationary adjustment, sorry, the word just slipped me, that there would have full impact now of the increase in staff costs from some salary adjustments that we had to make last year to keep consistent with market as it relates to our techs. And the whole issue of techs is quite topical and in the news because we do know that our radiographers in Jamaica are not in large supply. And in the past, quite a few of them have gone overseas to seek better earning opportunities, So now we see the full impact of the increase in salaries to them, increase in salaries that I would not say are not justified. You would note, though, that our admin expense ratio, what has really happened to it is that because of the reduction in revenues, it has gone back up from being in the high 30s now to being in the high 40s, which was not a position that we were in since financial year 2022. And so the question is, what do we do to right size that? And we are thinking that whilst we have to continue to manage our expenses and manage them prudently, the key to actually impacting that is to grow our revenues at the pace that we envisioned last year and that we still feel is possible. And I'm going to speak a little bit as when we look at it going forward, where we are now. In relation to the staff count, we would set our staff count increased in the last 2 years by 13 persons. 4 of those were techs as we were building out the new modalities. 8 were in the area of customer service, which as we look for efficiency in the future, we actually will determine how we right size that, because we don't think it's a situation where we need to actually reduce the number by actually making a decision to reduce, but over time as persons move on, it would mean not refilling those positions as we become more efficient. So let me look at the balance sheet as the final part of the performance of the last quarter and year to date before I move forward to what it is that we want to look out for. So our property, plant and equipment changes would have resulted because of the addition or the acquisition rather of new assets. Our receivables, trade and other receivables, went down by 60%, and that's really because we were carrying payables for the new equipment that we got, and the final amounts were paid over, and our liabilities would have increased significantly by 75% as a result of our increase in borrowings. Because remember, we had used our IPO funding to buy the property at 33 Lady Musgrave for our new Winchester location, and so to buy the machines we actually borrowed. And I think I was asked the last time about the rates, and I assured our shareholders that there were very competitive rates that we had gotten in the region of 8 to 8.5% for the mammo and the MRI machines. Okay, our cash flow, we see that we generated cash flow during the period, but we realized that we would have paid out significant cash flow as we paid back our loan to our shareholder that I had disclosed in the last financial year, and as we paid all our large liabilities down, which a lot of them would have been associated with things to do with our expansion plans. So key to watch in moving forward, because you can always talk about the past. Not much you can do about it besides learn from it. The important thing is what you look at now for the future. What are our lead indicators and the things that are going to really tell us how we're going to do going forward and that we are focusing on. So let's talk about the new modalities. Obviously, it's a given that we have to ensure that our machine uptime is in place. And as we disclose in the director's statement, our CT machines are back up with the exception of our 129 Pro unit, which we consciously made the decision not to invest in further. Last financial year, we were plagued with a lot of issues and we replaced several major parts. So at this point in time, we were of the view that we had a maybe old shell, but really a new machine functioning. So when it has decided now to give us some trouble, our view is that it didn't make sense to throw more good money after something that is obviously bad, and it makes sense for us to make a decision about what we do to outfit or replace, and whether we do that now or we wait until we move to 33 LMR. So I will focus now on the new modalities, mammo and MRI, and you will see on the screen that for the 11 months since we started, so I'm taking you a little bit out of the realm of this quarter and even this financial year. If you look at it, we would have done 2,618 scans, and we take our scans down to the number of scans per day, because we have measures and targets for that. And we ensure that our booking allows us to facilitate the amount that we want. And so there were 278 working days in that 11-month period, taking away our public holidays, but adding our Saturdays because we are open on a Saturday. And it would boil down to just about 10 per day, 9.5 something per day in terms of scans. So what we had targeted to be at this point was at least 20 scans per day. So we are working tirelessly towards that. You will note that, or I should share that there are months where there are peaks. So you will see a peak in, of course, October that we are in now, Breast Cancer Awareness Month. And then you will see other peaks in the months trailing right after where people come. And then we have partnered with quite a few, 3 at this point in time, overseas entities that actually sponsor mammograms for ladies in Jamaica that can't afford. And they normally come on those mission trips in January or February. So you again see a little peak there. What we are trying to do is raise awareness and partner with other entities to raise awareness such that you're not seeing so many peaks and troughs, but you see a normalization out to give us that average of about 20 scans per day. As it relates to MRI, you note that we did 817 scans in the period, and that would be a 7-month period now. Again, taking you a little bit outside the realm of this financial year only. And that is 155 working days, same formula, take away the public holidays, add Saturdays that we work. We didn't start with MRI in Uterus on Saturdays until the last 2 months. And that what that worked out to is us doing 5 MRIs per day. Now, I know for some other entities, that actually is what they target doing, but we have very aggressive objectives that we want to achieve because we wanted our return on investment to be a little faster. And so we were targeting more in the realm of 10 per day. I'm happy to say that based on the changes that we have employed in the last 2 months or so, 6 weeks, probably more accurate, we are at the level that we're targeting to be, and we will only grow from there. It took some time, a little longer than we had anticipated, just for our team to get it really clicking right in terms of, you know, what it is to be done and how to confirm appointments, etc., based on the review process that has to be done by the radiologist first, but we are now on track. So I wanted to share this little bit more detail with you to have you understand that when we say we're working towards it, is actually very active measures that we're taking. We're looking on our execution on a daily basis. Outside of that, what it is that we need to do is look at our scan count growth by source. I reiterate again, I don't ever think that public partnership will end, especially for some modalities where the public system just will not have the capacity. And just as private sector companies, diagnostic imaging companies experience downtime, so will public sector. So there's always going to be some happy balance there. But we have to look at the referral base that we get by both our public referring doctors as well as our private referring doctors to ensure that any change in our public system referral doesn't impact us significantly. By branch, it varies the amount of referrals that we get. It's anywhere between 20 and 40% by branch. And so we're looking at that and targeting for ourselves, you know, the number that we really want to be at. And I think in a prior earnings call, I would have shared that somewhere around 30% is comfortable for us for many reasons, including the impact on our cash flow. And that takes me to the next thing that we're doing is management of our cash flow. So we would have been challenged towards the end of the last financial year and the start of this financial year by the change in frequency of payment by one of our larger payers. That is slowly regulating itself, and some changes that they have made have given us the confidence that it will improve. However, we have also, for the first time in the financial year, this financial year, in the second quarter, we would have entered into an arrangement where we sold some of our receivables. And we did that just to ensure that the business was able to continue to manage and not have to cut off for any period offering services to the public system. That has worked out well for us, and we think that it is actually now a tool that we will have for future should we need to employ it again. And so that's how we would go about managing our cash flow. So all that said, what's the outlook? The outlook is looking at machine uptime from diversified revenue streams, and that's a phone in the background ringing, which we're now going to click off. So sorry for that. It's an active studio. I'm actually in the marketing department of Apex Radiology. So we're looking at our machine uptime and our diversified revenue streams. You know, the good thing is that even though we were down CT by, if you think about it, in the first 6 months of this year, because we had the failure down by 70 million, we could compensate with Mammo and MRI as new revenue streams by 53 million. So even though it did not add to, you know, the incremental increase year over year that we wanted, you would see that it helped to compensate for some of that downtime. So diversification is always a good thing. We continue to focus on the enhanced customer experience, and that's both for our referring physicians as well as our patients. The issues that we have contending with, we continue to work on them, and our new Chief Operations Officer is focused on that, and we have some KPIs that we must report to our board on. And I believe that we'll be so comfortable in the coming financial year that we will share some of those customer experience KPIs with you, our shareholders. I'd spoken to the impact of growing our revenue, and I'd spoken in the last quarter, I think at the AGM, about the importance of looking at some inorganic growth opportunities. And I'm happy to say that we are actually exploring two, and we're in preliminary discussion stage. And should it reach a point where anything is concretized, of course, we will disclose to the market. But the idea is that we're doing some preliminary due diligence, and the prospects are looking very positive. And finally, our joint venture for 33 Lady Musgrave, the build out. So I would have shared the last time that we are in discussion with potential partners. I'm happy to share now that our board has made a decision after completing due diligence on one particular partner. So we have a partner of choice, and as we speak, we are actually going through with the lawyers on both sides the joint venture agreement, and that is something that we will complete by Q3. So at the next earnings call, I should be in a position to tell you what we are doing if you don't hear about it or read about it prior by some kind of release from us, you know. So we are very happy about that, because as we know, building out in that way will help us to expand some of our services such as interventional medicine, and will allow us also to have further redundancy by having more than one of a modality at the location. So for example, we intend to have at least 2 CT machines at that location. Outside of that, just to assure you, the other 2 slides that will quickly cross your screen are just to say we continue to participate in activities with industry partners, and that we continue to keep our team members engaged. Apex Radiology is not a company that you find plagued with a lot of attrition. Even though I spoke to even techs, we don't have that, because we invest in our techs, and we actually are seeing where several of our radiographers have been cross-trained or up-trained to deliver the more technical modalities. So we don't suffer from a lot of attrition, but we also think it's because there is a passion for the way that they serve, and there's a passion to serve together as family. So I think that's all I wanted to actually present, and now to allow the opportunity of the rest of the call to entertain any questions that may come in from our shareholders or the Learn, Grow, Invest community.
Thank you so very much, Keisha. As always, very comprehensive. So we have a number of questions. I will go ahead with the audience questions first, and if anything is left for me to ask thereafter, I will do so. But I believe the audience questions would have covered most of what I had noted prior.
Okay.
So we will start with the questions from Limitless Podcast. The first question is, do you offer packages or discounts for mammograms given that they are recurring?
Yes. So we currently are offering a 10% off on mammograms across the board to anybody that comes in. And in addition, we do have corporate entities that buy a block of mammograms for either their staff members or to gift. And in such cases, depending on the size of the block, we will discount it even further than the 10%. So yes, we do. And we offer 10% in recognition of the fact that it is something that, as the person, the podcast is asking, that persons have to come year over year after age 40 to have their mammogram screening done.
Thank you for that. Their next question is, would you consider offering PET scans?
Okay, so we actually, looking at our nuclear medicine offering, we are actually in looking at the new technology that we're buying, determining what best for us to offer and how best to offer it. So I won't say yes or no at this point in time. I'll say by the next earnings call, I'll be able to answer that, because it's something we have to look at, as you can imagine, as we contemplate what's going to go into 33 LMR in terms of the modalities or buying new machines, then we'll be making those decisions as well.
Okay, great. The third question from Limitless is, what interventional radiology services do you offer currently, and what are some of the planned offerings?
Okay, so I don't want to speak out of turn about the planned offerings, but I will just indicate that we offer quite a range of biopsies now: breast, thyroid, I want to say lung, I don't want to tell a lie. And somebody on the team can check in the meantime. And we do port catheter placements and other things. So I'll have somebody on the team check so that we can always add it to what I have said. And in terms of what we will offer, again, I can note that for the next earnings call and answer both the PET scan question and the kind of interventional procedure question at that point in time.
Okay, thank you. You may note that the Limitless team comprises of doctors, so they are very interested in what.
So maybe I should flip it and ask them, what do they think we should offer? Because we do know that part of our business model, I mean, we do earn money and we do return profit to shareholders, but a big part of our mission is offering the services and enhancing what exists already. So Limitless team, you let us know what you think we should be looking towards.
That's right. And the final question I'm seeing from Limitless right now is, are you willing to adopt AI in reviewing scans?
So that came up in our recent board retreat. And I think what our chief radiologist and the team decided to do is let us look some more into it. We thought that there are definite opportunities. It will not replace, and you will still need a human radiologist to actually review and maybe fine-tune, but it is definitely something that's on the table for consideration. And perhaps maybe what we can do at the AGM at the end of years, that we can have something or a presentation on that so that our shareholders can actually learn something, you know. So that's something that I'm going to ask our marketing team to note that we can consider doing.
Thank you. Sounds good. Now we have a set of questions from JLP for Jamaica. The first one being...
That's an interesting name.
The first one being, with 3 consecutive quarters of negative growth, this is signaling administrative errors or business model failure. What measures are being put in place to address this?
Well, I am hoping that the explanation I gave earlier, the detailed explanation, would help the person posing the question to be assured that it's not an issue as it relates to administrative errors. I am also hoping that, knowing it's the exact same leadership team that has shown or delivered the growth in the company since 2020, then the person posing the question will also realize that it could not be such a, what would I say now, such deliberate errors. But I really think that the answers I provided prior around what happened and the details thereof would help to answer or allay that shareholders' fears.
That's right. And we just got clarification that this is Elaine.
Okay. So Elaine, you change up your name on us.
I know, right? So Elaine, you can let us know if what was shared earlier does address the concerns that you would have shared in that particular question.
Yes, please do.
So
and I know, because I would also be wanting to know that if this happens so far and our profit is below what we anticipated, what's going to happen for dividends? Because I know Elaine is always asking that question as well.
That's right. Okay, so his next question is that, or first, a statement, a notification was sent out by the company that a location will be closed for 2 months. Can we therefore expect a net loss for Q3 as well?
Okay, no. So the location that was closed is 129 Pro, and it's because it just makes business sense once we realize that it's not impacting our referring physicians and not impacting our ability to take our patients. So the 129 Pro CT, as I indicated, we decided not to put any more investment in that unit based on the failure that happened this year after all we invested last year. Outside of that, that location would then be outfitted for offering ultrasounds and x-rays. Ultrasounds and x-rays on their own would not give a good enough profitability for that branch to carry the branch. So what we decided to do was open our Winchester Road location for 7 days to actually be able to facilitate our appointments so that we do more in the time at Winchester than we were doing before to accommodate the flow from 129 Pro. What we also did is if we find that we have a week where we don't need to open on the Sunday, then we facilitate later bookings on the Monday to Friday to accommodate the same patient demand. And so I can tell you that based on, I hope my mentor is not going to say that this is me going ahead too far with the results for this quarter, but based on where we are so far, we're back to our expected, anticipated normal levels of revenue. So no, I don't think you should expect that, though I am not God, but I don't think so.
Okay, and you got a response there that it was a good move to do what was done. He's happy about that part.
No, I didn't hear you because I don't know if it was on my side or your side, but we had some kind of disruption in service. Could you repeat?
Oh, I'm sorry. Elaine was just commending the move, saying that it was a good move there. So our next question is from Harold, and he's asking what strategies are in place to eliminate the same issues that your competitor has been facing for years now. That is the downtime in machinery, which goes down after a certain amount of use. Which you would have addressed it earlier in some sense, but basically the question is what are you doing differently from your competitor so that you don't fall into the same cycle of machine downtime?
Okay, I think if we are being fair to our overall results and our results for the last number of years, I think that we have managed to manage the level of downtime. I think that we just had very unfortunate circumstances in Q2 and at the end of last year and for a portion of last year with the same CT at 129 Pro. And perhaps in hindsight, we could have said at that point, bite the bullet, order a new CT. It would have taken 4 months, but then maybe if we were even down for those 4 months, when we had the failure this year, that would have been a newer unit that the tube wouldn't have been expired. There's so many things you can say in hindsight. So I think that with everything that we have learned, with it happening to us this time, we don't anticipate it recurring. But I think if we look overall at our performance and measure it against anybody else who is listed in the market, we would see that we have managed ourselves well to this point,
So similarly, Harold was speaking to the downtime being predictable based on usage and asking what is in place so that you're having a proactive response and not a reactive one, which he deems is now the case.
Yes, I don't know if Harold had caught my answer earlier when I explained. So it's not just general usage, but in this, because it's not always the same thing that causes an issue for downtime. But the thing that impacted us in the last quarter was with tube usage. And as I had tried to articulate earlier, and I'll just try to say it another way, is the tubes are not parts that, because of the storage conditions, because of the warranties, that now imagine our suppliers, not only locally, but the manufacturers of the machine would have ways in which they operate that are not only peculiar to Jamaica. So, we're going to go now and ask them for a new way to look at it, where we're going to ask them, okay, suppose we need to bring in something a month before, even though it's not diagnosed to be the issue, how long would you extend our warranty for that kind of thing? It's not a usual ask that we're going to ask, but we're going to explore everything possible to try to have a backup on hand so we don't have to be so at the mercy and incur such large risk based on logistics for delivery and transportation, but we also have to ensure that we can store it appropriately so that the part is good. So I don't know, Harold, if that now answers the question for you.
Yes, and I believe earlier you mentioned that one of your tubes was damaged on arrival. So it didn't...
Yes, so it was actually, we actually got a few days use out of it, and then it was deemed to be defective. So that happens too, so you get a part and it's defective, so as I said, it's just like what would you call it now? Just a whole storm of activities that would have occurred to cause that.
Yeah. Mm-hmm. All right. So Harold, we do hope that answer satisfied the question.
I hope so.
So Elaine again is asking, is the company experiencing a decline in the number of scans coming from governmental contracts?
No. What I would say is that there was a definite period of change. So without getting into too much of the nuts and bolts, there was a centralization of the procurement of services to private diagnostic imaging services, and now it has been decentralized. So of course there would have been a period where shifting from centralized to decentralized, and the approval processes being decentralized, and the requests and the budgets, etc. Then there would have been some amount of change where people got accustomed to that, and that would have happened in the second quarter to start effectively 1st of September, which is the beginning of the third quarter for us. So that had people kind of been a little bit, okay, what are we supposed to do here? Are we supposed to refer, that kind of a thing? The demand is still there. And then, of course, we would have had less capacity with all our machines for CT in particular being down. So I would not say that the demand is down. I would say the demand is different, and the demand is going to go where you have machines functioning. So we would have been impacted, and when our machines came up, it will then take some time to remind everybody that, hey, we're back and everything is back to normal operations, which, as I said earlier, it is, and everybody is aware, and our revenue numbers are back to what our shareholders are accustomed to.
Okay. So Harold asked another question.
Ooh. Yeah, I don't know what's happening, Renee. I don't know if it's, are you hearing any distortion when I speak? Because I'm hearing distortion when you speak. Are you?
Well, you froze a little bit just now, but you're back.
Okay, so maybe it's on our side. So our team will look at the signal. Sure, go ahead.
Right. I hope you're hearing me clearly now. So Harold had another question. Okay, great. Mm-hmm. And that question is, what are the timelines for these modalities to be fully implemented? And I take it that these are the new modalities that he's referencing, and the time frame in which you anticipate to start seeing the returns on these. I think you would have addressed that, but I'll ask you to just summarize it.
So Harold, you joined us late, man, because I actually articulated that to say that we our MRI is getting to the level that we want, and our mammos are more seasonal, so we're working on strategies to smooth them out. We had looked at a conservative enough return on investment timeline on our machines of about 3 years.
Fantastic. Mm-hmm. The following questions would have come from the Observer.
Okay. I see they had an article today. They were more gracious than the others, because we saw 4 articles, and what I realized is that several of the points were what were in our director's statement, but the headlines, oh my gosh, I saw IPCL flops and, went on and on. So let's hope the Observer questions are a little kinder to me, right?
I think they are. So the first one is, have CT scans been just disabled permanently at the Hope Road location, or is there an intention to introduce the service at a later date? Which again, I think you addressed
yes, we earlier. Say again that yes, we decided to just park that machine. Because we want to have redundancy in Kingston, a new location, we are actually going to acquire a new CT machine. So it's down to the timing when we're going to do that. So for now, it's parked. We have extended services being offered at 38 Winchester Road.
Fantastic. The next is, does the company expect receivables collection to be robust enough to reduce the bank overdraft?
I think I heard, does the company's receivables collection be robust enough? That's what it was. That's what he said.
To reduce the bank overdraft.
Okay, sure. All right. So if we return, and I'm thinking very deliberately because everything I say, I want to be able to stand behind. If we return to the normal frequency from that large payer, which I am seeing signs that could be occurring in this quarter, then we will be able to reduce and maybe eliminate the overdraft that we are now utilizing. It fluctuates. We don't use the full extent of what is available to us. It does fluctuate. And if we do get that, those amounts, because they are relatively large amounts, then we would more than be able to clear the overdraft.
Fantastic. How has Image Plus navigated the increased salaries in the public sector and moved to add more equipment to the system?
How have we navigated? Again, you broke up the salaries in the public sector and moved to, I didn't hear the last part.
Add more equipment to the system. I'm not so clear on the second part of.
Yeah, because I think the only equipment that we added in this period is in financial year 2024, we would have expanded our ultrasound offering so that we have redundancy at all of the locations. In 2025, so far, we would have had the full implementation of mammo and MRI. As it relates to the salaries, you're seeing the full impact of the public sector adjustment in this financial year. So we would know that they did an adjustment. Last year, we would have done things to carry the salary up to what they paid for 2023, and this year for 2024 into 2025 financial year. And we made the adjustments for both periods. So you're seeing the full impact of that. And I was explaining earlier that our salary costs, staff costs increased by just over 14% when the inflationary rate that we paid generally was below 10%. It was in keeping with the point-to-point inflation as at the end of January. And so you're seeing the full impact of it, as well as the fact that we hired more staff. So if you look between 2024 financial year and then 2023, and 2024, I think the staff number went up by about 4 or 5 persons, which were employed for the new modality. But there's nothing more to come in terms of the impact. Of course, there would also be the addition of our chief operations officer at the executive level, and we had a senior accountant in the last quarter of financial year 2024. So you're seeing the full impact in the increase in staff costs year over year of 14.5%.
All right, thank you for that. And the final question from the observer is, have you been doing more direct marketing with doctors to drive traffic to the locations?
Yes. So what we have embarked upon is that we would have staff from the 129 Pro location. Our supervisor there would be very au fait with the company and our offerings, and would have joined the marketing team. And our marketing team, in addition to what they were doing before, have taken on a particular target of private physician, in particular visits each week, and that will give a certain amount each month. And the idea there is that even if the doctors know of us already, some it may be because they're new doctors. You have new doctors graduating every year, and as we know, in this generation, most of them want to be entrepreneurs for themselves, so they may not be working with an entity, but we go to familiarize them with us as a provider. We also go to our existing private doctors who refer to us, which we are blessed with a good number of those that refer to us on a continuous basis, to just find out if there are any challenges that they're having, to update them on our offerings and ensure that the relationship remains harmonious. And so, yes, it is important. You will note that outside of awareness ads that we may do on the radio, you may see us in more routine places where the everyday average Jamaican will see us: bus stop signs, billboards, that kind of thing. The majority of our efforts are really on direct marketing, because it it all boils down to the human relationship and interface. And so the doctors have to know that if I'm calling and I have an issue with a patient I want squeezed in urgently, or I need a report urgently, or I want to talk to a radiologist, which is very important that they can actually speak to the radiologist that relates to their patient. That one-on-one contact and direct marketing in quotations to them is important, if you call that marketing, because I really think of it more as relationship building and having them be aware and us answering their questions.
Okay, thank you for that. And Ryan is asking, how advanced are the discussions with your broker to explore partnership opportunities with the radiology company they recently acquired? Erin Radiology is what he believes it was.
Our broker. Oh, you mean the broker that took us to market? JMMB
Right.
Fund.
I don't know how
JMMB
much you can speak
Securities
on that.
Limited, I think it was.
Yeah, I don't know if you
Oh,
can
but that
speak on
would
that,
be,
but that's the question.
I'm happy to say that I cannot speak on that because that would be a completely separate conversation from what they would have with us, I would imagine, for many reasons, many governance reasons. But what I would have read in the newspaper is that they, through a private equity fund that they have, did an investment, but that would have nothing to do with us as a offerer of the service in the market. And the persons that I meant that we are speaking to is not them.
Okay, thank you for that clarification. Elaine is asking, what is happening with our stake in Winchester MRI? And I love that he says our.
No, yeah. But remember, Elaine owns us completely. And that's why you want to know if we're having administrative errors. I love it. So with our stake in, no, it hasn't changed. We own a 30% stake. You will note that we don't have anything carrying our financial statements, like any share of profit, etc. So in the event that they actually have something to have us share in profit, then you will see it reflected in our statement, in our financial statements. But for right now, our investment is there. That was made several years ago. And we don't have anything showing from a financial perspective in our statements at this point in time.
Okay, thank you for that. So I'm seeing a question here from Rachel, but this would be repeating what was shared earlier. Rachel is asking, with the bone scan being down for some time, do you think that the revenue that is usually generated from this modality affects the company's overall earnings?
So yes, it would affect the earnings, and it is up to us to ensure that we have it up in the quickest possible time, and to ensure that how we approach, if a replacement is necessary, how we approach that is also quite prudent, So yes, any machine downtime impacts our earnings. Right. But I would not say significantly. I mean, it's not something that I would, at this point in time, be very concerned about to even flag as a red flag to our shareholders. In our nuclear medicine offerings, we do two things. We do several scans, and we also do radioiodine treatments, and our radioiodine treatments, for the most part, remain untouched, So it's our scans that will be impacted.
All right, so we are down to our last question. So
sure.
If there are any other questions, please do put them in the chat now. This is our final question as it stands right now. And it is also from Elaine asking if IPCL...
Why you sound like you're trying to get more questions from me?
Well, that's why we're here, right? To have your shareholders ask the questions they have for you. So
remember though, they can always send it to info.shareholders, info.shareholders@apex-radiology.com. So don't think it's only at this point in time. Though I love to speak directly to the Learn, Grow, Invest community, you can always send a question to us as a shareholder.
Absolutely. Thank you for that reminder. Yeah. So the final question right now is, does IPCL have a TikTok page that is an avenue for increased market exposure and free advertising?
Yes, I am. It is so, what is the word now? I'm looking at the person behind the camera who is responsible for that. So you just added something to her performance appraisal, because that is something that we have to realize that every generation you appeal to them differently and they get information in different ways. And as a matter of fact, we monitor TikTok because we have feedback, have had both positive and negative via that medium. So I'm hoping that you're going to see something soon. I'm looking at her with my eyes wide open behind the camera.
All right,
and I think she said, do, but maybe it's not promoted enough. So what is the TikTok handle? I can just tell them now. Oh, she says it's apex.radiology. So you guys can check it out and send her some feedback on whether or not it's what you want to see.
Got it. Thank you.
You can tell I'm not a TikToker.
I'm struggling too. So we will close on this comment from Elaine, which says, IPCL has one beautiful thing going for it, and that is shareholders can trust the words of the CEO. You will deliver.
Thank you, Elaine.
You will deliver.
We aim to, and it's a whole team behind me, and yes, we will deliver. And behind us is our board members who are standing up for our shareholders, very passionate and very real time. So they'll call and give feedback in real time. So thank you on behalf of the team, Elaine.
So thank you again, Keisha, for spending the time this morning to share on the performance and to be so transparent in terms of what has been impacting the performance of the company. I am sure that everyone who has watched would have gained some additional insight and some clarity about what has happened and what they can expect to happen in the future. So with that, we will close out, unless, of course, there are any closing words that you'd like to say, any final words you'd like to say to your audience.
I think I would just wrap up by saying that, I think the test of something that's built solidly is determined by how you manage a challenge or something not going the way that you expect it to. And I think I can honestly and truly say that every member of the team at IPCL recognizes that the result that we just delivered is not what we want to deliver, and that we're being very clinical about how we approach correcting that. And you have a company in IPCL where we are passionate about delivering healthcare services, and we're passionate about doing so with excellence, because we recognize the impact that we can have on helping our nation, our Jamaicans, to be well, and even persons from the wider Caribbean community, because we do have patients that come from outside of Jamaica to access our services. So we are committed to that, and we're also very cognizant of the fact that in 2023, we took shareholders' money, that's hard-earned money, and we want to give a return on that money and ensure win-win for all our stakeholders. And so the entire team at IPCL thanks you for your continued confidence, and thanks the referring doctors for the continued confidence they have in sending their patients to us. And we commit to living up to the expectations that you have of us, and if we don't get it right, the first time, to get it right thereafter. And I would say thank you and have a great day.
With over 25 years in providing quality service, Apex Radiology is Jamaica's premier diagnostic facility. Our services include CT scans, nuclear medicine scans, ultrasounds, X-rays, mammograms, MRIs, and more. We have 3 easily accessible locations in the Kingston area and 1 in Ocho Rios. Our MRI services are offered at our Ocho Rios branch, located at White River North Commercial Complex in White River. With cutting-edge technology and compassionate care, experience the difference with our fast, precise, and comfortable MRI scans. Your health journey starts here, where accuracy meets comfort. Apex Radiology is the clear choice for your diagnostic needs.